So, hello everyone. Let's start with the topic of the day. Today we'll start with the definition of financial accounting, which we have already discussed in the previous video, and we'll continue with the last step of financial accounting process, that is your communication of financial information to the users. Okay, to the internal and external users. So the first step of financial accounting, which we discussed in the first step, this is a process, this is accounting cycle over here. In accounting cycle, there are 5-6 steps which I told you: recording, classifying, summarizing, then analyzing, interpreting, and communicating. Okay, so this last step was remaining in the previous video. So this users we will discuss today, that is the communication of financial information to the users. And next one is the objectives of accounting, and also the difference between journal and ledger. Okay, now generally in the exams, question comes in the form of basically like 2 marks question or the full-fledged question, depending upon the question, like define accounting, who are the users of accounting information, define the journal, define ledger, or what is the difference between journal and ledger. So these are the theory questions which can come in the form of either a full-fledged question or can come in the form of 2 marks. Okay, so depending upon the choice, you can answer the questions accordingly to the weightage of the marks. Okay, now this is a very good answer I have prepared. So you can see over here, analyze and communicate. This was the last step which was remaining in the previous video. So again, I'm continuing with the definition of financial accounting only. So the last step was analyze and communicate. Now, analyzation, we have already told you about the financial position analyzation, which can be done through financial statements. And the last one is communicate. Now, whom you are communicating the information which you have presented in your financial statements, you are communicating to the users. आप किसको information देंगे? Internal users को and external users को. Now, if you can understand over here, internal users means who are actually running the business, who are involved with the business, within the business. Okay, so internal users, who are the internal users? Your owners, your employees, and your management. Obviously, your owners who have invested the capital into the business, who have actually contributed the money into the business. Okay, so obviously they're more interested in the income earned by investing their funds into the business, how much income is earned, how much profits they will be earning in the business. And employees, obviously when an employee is associated with the company, then he's always concerned about what kind of salary we'll be getting, how much bonuses can be there, what is the promotions and hikes in the company. So if a company is good, profitably sound, and is financially very sound, obviously it will provide more to the employees and will keep the employees happy. So they are more concerned about the good salary and bonuses provided to them. If you talk of management, obviously management, what is management? If in the terms of management, what is the meaning of what is the meaning? Management basically is of have 5 functions. Managers have 5 functions: planning, organizing, controlling, directing, and staffing. Now, if you can see in any organization, this is a very basic function. Now, if the financial accounting information is helping the management to actually coordinate and actually basically control the performance of the organization. How? Because obviously managers, they set the plans for the business, and whatever any deviations, if there are any deviations in the performance and the profitability of the business, then they come to know about where they are lacking, where are their shortcomings, what are the shortcomings, where what are the causes of the deviations, and they analyze those factors which helped in increasing the productivity and efficiency of the company, and ultimately they'll improve the company results. सो बेसिकली मैनेजर्स का क्या काम होता है कि वो कंपनी की परफॉर्मेंस एंड पोजीशन को, फाइनेंशियल पोजीशन को इम्प्रूव करें. एंड इफ दे इम्प्रूव दैट पोजीशन, obviously they need the help of financial accounting information. If they think that the profits are less, or you think that the losses are increasing very more, okay, so what they can do is they can actually analyze why it is so, and कौन से products जो हैं which are more profitable and which products are less profitable, so accordingly they can discard them or can improve the performance of the company or the business. Now next comes is your external users. Now external users means जो company की information को use करते हैं for their own benefit and interest. जैसे कि आपके lenders हो गए, अब they are providing actually loans to the business like banks. So they are more interested whether the business will be able to repay their loans along with the interest in time or not. Okay, so they are more interested in in this information. If the business is good and profitable enough and has good market share, obviously the people will be more interested. The banks will provide more loans to such kind of companies. Creditors are those people who provide the loans or who provide the materials on credit to a business. Like I told you, creditors are always associated with accounts payable. Okay, so if the business is good and the business is running very well, then obviously they will not feel that they will not hesitate in providing the materials on credit to a business, because they know they will be paid in time. Then you can see customers over here. Customers need to know obviously whether they can depend on a business for a continuous supply and a stable supply of the goods, and obviously they want the quality products. So if the business is profitable enough and has good financial position and obviously is having enough assets also to meet just day-to-day obligations, customers see that the business will sustain in the future and they can depend upon that business for their products. Then government is more concerned with the income tax department, because they want to have taxes from the businesses who are earning good profits, and as well as according to the profitability of any business, taxes are charged by the government. The local public, obviously it's very important that whatever products the company is making, it should not create hazards in society and community at large, because you should always take care that you should not create any occupational hazards for you, people around you, and there is in a society, because it is an iron law of responsibility of business only to make sure that they do not use their power in a wrong way, or they should not be involved in any kind of illegal trading practices also, because it will ultimately affect the local development and growth of the community. So it's very important that these are interested in the accounting information. Okay, and one thing more, one last one is investors. If you can notice over here, investors basically they invest in the company. If a company is providing good returns to them, they will obviously invest in that company, and this way these all types of external users, they make use of the accounting information. Now, if you can see over here, it's also a very good question which can come in the form of 2 marks or 5 marks. So you can see over here, journal and ledger. Basically, now you can see over here, nature of the book. Now see, we have already discussed journal and ledger in a quite, efficient way in the last video. So I just wanted to just clarify these differences with a very short explanation. Okay. So I've already discussed that journal is a book of primary entry, ledger is a book of final entry, because the first and foremost the transactions are recorded in journal, and uske baad they are recorded in the ledger. So it is a book of final entry. It is also called the book of principal accounts and also called the books of final entry, because it is a principal book, because ultimately from this ledgers only the trial balances, balance sheet and other financial statements will be prepared. So without the ledger it is not possible to prepare the financial statements. Okay, now if you can see over here, what is the basis of preparing the journal? How can you prepare the journal? What you actually have to prepare the journal? What sources you have? You have invoices, vouchers, receipts, then your bills. They are actually evidences in preparing a journal. In case of ledger, you don't have anything, just to have the journal. So basically journal forms the basis of entering the transactions into the ledger. Then it is a very first stage, the transactions are recorded, and in this way the transactions are recorded in the second stage. Over here recording is done in second stage in the ledger. Then obviously whatever transactions take place, they are recorded in journal in a chronological order. Chronological order means sequential order with proper day and date and timings, because it is very important that whatever transactions have happened in the business, they are recorded as how they actually occurred. Okay, that is the proper day, time and date. It is prepared to see the net effect of various transactions. Now if we come to the ledger part, it is prepared to see the net effect of various transactions affecting a particular account. Now what does it mean? Now if you have understood the ledger part, you will come to know that you prepare a cash account or the furniture account receivable account, then capital account. So all the accounts are prepared differently and are in a classified form. So all the transactions of similar nature are recorded in one account. See, all the cash transactions in cash account, all the furniture transactions in furniture account. What does it mean? That means all the transactions which are affecting a particular account, say cash, are recorded in the cash account. All the transactions, say all the various transactions affecting a particular account, say furniture account, they're recorded in the furniture account. So that means it shows a net effect of various transactions. How? Because if you remember, we discussed in the ledger about balance CD and balance BD. ठीक है, हमने बैलेंस सीडी डिस्कस किया था. सो बैलेंस सीडी मतलब जो आपका बैलेंस रिमेनिंग है उधर. ठीक है, सो वो जो बैलेंस रिमेनिंग है वो नेट इफेक्ट है, नेट कैश बैलेंस है जो रिमेनिंग है विद द कंपनी आफ्टर मेकिंग ऑल द एक्सपेंसेस. सो इसका मतलब नेट इफेक्ट क्या हो गया, इतना कैश जो है स्टिल आपके पास रिमेनिंग है 36,000 इफ यू रिमेंबर द एग्जैक्ट अमाउंट. सो 36,000 क्या नेट इफेक्ट है. दैट मीन्स एक लेजर एक नेट इफेक्ट दे देता है ट्रांजेक्शंस का आपको. ठीक है, सो इसके लिए हम बोलते हैं लेजर गिव्स अ नेट इफेक्ट ऑफ द वेरियस ट्रांजेक्शंस अफेक्टिंग अ पर्टिकुलर अकाउंट. देन यू कैन सी ओवर हियर जर्नल के 5 कॉलम्स होते हैं, लेजर के 4 आइडेंटिकल कॉलम्स होते हैं. ओके, देन जर्नल इज नॉट बैलेंस्ड. ऑब्वियसली इफ यू रिमेंबर बैलेंसिंग वाज डन इन द लेजर नॉट इन द जर्नल. If you remember that previous video, you will see that all the ledger accounts I have shown you how they are balanced. Okay, so the ledger accounts are balanced and journal is not balanced. Obviously the process of recording the transactions in journal is called journalizing, and the process of recording the transactions in the ledger is called posting. Posting means transferring basically the entries from journal to ledger. Then what is the basis of preparation of financial statements? Obviously I told you journal does not directly serve the basis for preparation of final accounts. What does it mean? अगर आप खाली journal बनाएंगे तो आप financial statements नहीं बना सकते. With the help of journal you cannot make the financial statements. लेकिन अगर एक बार आपने ledger बना लिया, if you have once made the ledger, then आप financial statements आसानी से आप बना सकते हैं, because you have already have a net effect balances of all the different accounts. Okay. So that is why it is said that ledger serves as the basis for preparation of financial statements or final accounts. They are same things. Now the last review of this definition which you have understood about financial accounting, that is recording is done in the form of journal. That is the first step, that is to identify the transactions, that is identify the economic events, and then you record them in journal. Then you classify, then you actually classify in the and that is post the entries into the ledger. Okay, that is you classify them all the different transactions according to the similar nature and put all the transactions of similar nature in one account, which is ledger. So different ledger accounts are prepared, like cash account, profit and loss account, then your capital account, then your revenue account, your income tax account, rent account, etc. And then finally from the ledger you prepare the financial statements, which is called summarizing. That is, now if you look at these statements like income statement, balance sheet, profit and loss account, and your trial balance, you will come to know immediately what is the position of the company, how the company is performing, what is the position of profit and loss in the company, what is the profit, what is the possibility that the company will sustain in future. Okay, what products are giving profitability, which products are lacking the profitability. Okay, so where the performance is lacking. Okay, so then you see interpreting, then you interpret and analyze the position of the company, and ultimately this information available in the final accounts is presented to the users of financial information, that is internal and external users, which we have discussed today. So after everything is prepared, अब आप इन सब information को अपने users को दिखाते हैं, managers को, employees को, creditors को, lenders को, investors को, and as well as to government, to employees, okay, customers, everyone. All of them are interested in the financial position of the company. Then the very last question, which can come in the form of question of a descriptive question, that is, what are the objectives of accounting? Now why I am discussing right now the objectives of accounting, because now you can easily correlate this answer with your previous videos. Okay, now if you can see over here, what is the first point of objective? To keep a systematic record of all the business transactions. Are you agree with me, right? Because now आपके सारे ट्रांजेक्शन से सिस्टमैटिक क्रोनोलॉजिकल रिकॉर्ड है, जिसकी वजह से आप आसानी से यू कैन एक्चुअली एनालाइज द पोजीशन ऑफ द कंपनी. उसके बाद you can understand about the profit earned and loss incurred during the accounting period by preparing profit and loss account. If you remember last time we discussed about the profit and loss account shows you the profit or the loss earned by the business, the gross profit and the net profit, both are provided by the statements. So you can analyze the profit earned or loss incurred by the company and which products are bringing profitability and which are giving the losses. Now, third one, to obviously you can analyze the financial position of the business at the end of each accounting period by preparing the balance sheet. Why I'm saying this? Because balance sheet shows you the assets and the liabilities. So whatever amount of assets you have is equal to, should be equal to the amount of liabilities. That means it shows you after every accounting period. Now what's most important thing is accounting period हमेशा 1 year का होता है. Let's suppose you have January to December, okay. Then you have 1st April 2000 suppose 22 to 31st March 2023. That means either it is in the form of April to March or January to December. So depending upon the company's policies, you have different types of financial year, but it is only of 1 year only. Okay. After every year, you prepare balance sheet, your balance sheet statements, your profit and loss account. So basically, you can actually compare your performance from 1 year to another. That is, you can assess the progress and growth of business from year to year, because every year these financial statements are prepared, and you can actually analyze your performance over a period of number of years, and you can actually see where the business has grown more profitable, and where the business, in which years the business was making losses. So actually it gives an idea that actually you can analyze the position of the business, what is the trend of the business over a period of say past 5 years. Okay, so this you can check out. You can actually compare your performance from 1 year to another. Then you can actually assist the management for decision making, which I told you right now, effective controlling and forecasting, because managers can take important decisions like which products to be continued for production, and which products to be stopped for production, and where are the areas which the company needs to improve their performance. Okay, so what are the factors which are affecting the performance and growth and efficiency of the company. So these are the factors which are to be analyzed by the management for taking the decisions. And obviously, if you know of window dressing and this manipulation of the accounts are very common today's. So that is why we need to prepare these statements so you can actually identify the frauds and errors which are happening in the business. Then to communicate the information to various users. It's a very, very important usage of accounting information, because if you have prepared your financial statements, it should be what presentable to these users. Okay, because they are the ones who actually take decisions on the behalf of the company. The last one is thank you. And now next time we'll discuss about shareholders, then your accounting equation, your revenue, your expenses, and then finally accounting equation. We'll start with the practical questions of accounting equation. Thank you. Thank you so much.